Hey guys, what's up? It's Stock Retail coming back to you. I am smiling pretty big here and laughing, to be honest. I don't know, an hour ago or so, probably you all started to feel the rumblings of AMC releasing an early surprise preview of earnings, which cracked me up. And the reason it made me laugh so much is I know I didn't see it coming. I bet you didn't see it coming. And I dare say some folks on Wall Street and around the world did not see it coming. So that kind of cracked me up. Friday after hours, early release. We don't have the earnings until May 8th. We'll talk about that in just a second. And I guess I'm just giggling because, frankly, I love when Adam keeps some people on their toes, right? Like we've had a lot of people fighting us and seeking to control narratives, control the stock price, control a lot of things. So when they have to deal with a little bit of a lack of control, kind of makes me happy, makes me laugh a little. So kudos to Adam for the earnings surprise. I was caught off guard, and I suppose not off guard completely. Like I've done plenty of DD on the earnings, and so I'm already ready to kind of share with you how I view this. But I don't know. I just thought that was fun. I thought that has to be some kind of chess move from him. It's a little unusual. It's out of the ordinary, and so when something's out of the ordinary for a strategic thinker like him, then I personally guess that actually it was thought through. So that's why I'm just kind of saying kudos to him. So why don't we just jump in? So I mentioned, all right. So the earnings kind of surprise release came out. I guess I shouldn't call it an earnings release. It's an earnings preview. So you can see it on the investor relations website. You can see that Adam, I'm showing his tweet, was referencing an article from Business Wire. So you can just go find that, go look at it for yourself. I'm going to show you some of the numbers. We're just going to dive right in, and it's actually going to be a little shorter video. If you're on Twitter, you saw probably that I was actually taking a day off today. I had a business trip this week. I was a little tired, so I was just taking a day off today and was chilling until we go to my daughter's track meet this afternoon. But then, like I said, Adam caught us all off guard, and I just wanted to get a quick response to this to let you know what I think I see, how I feel about it, and we'll kind of go through it. So it's not going to be like one of those long, deep earnings teardowns, because frankly, now we have to wait for the actual full earnings report. But I'm just going to pull some stuff high level that I saw on the website. So we'll just even jump directly in. What I saw, first off, I'm going to show you versus last year, and I'm going to show you versus my own forecast. So one of the things I like to do, in some ways, to kind of, I don't know, prove to everyone and prove to myself that I can tell what's going on, I'll often give you guys an earnings preview before the earnings release. And then that way, if I got it right, you know that I'm not just blowing smoke because I laid the receipts down. Adam didn't give me time to do that this time, so that's why I'm also laughing. But hopefully you'll believe that I'm giving you just literally what I had in the forecast here, and whether or not I'll just, I don't know, let's just walk it through. So the preview they gave was that we had 951 million in earnings. That is down 3 million from last year. Sorry, not earnings, revenue. $951 million in revenue, so that's the top line, down 3 million from last year. To me, that is a fantastic number. Just remember that January and February were just nothing going on. The strike had moved everything out. We had barely any movies in January and February. So that was a heavily strike impacted quarter. Probably the most strike impacted quarter we'll have, although Q2 has a little bit as well. So to only be down 3 million versus last year, just imagine what would have happened had we had no strike, how much up we would have been, which in a way confirms the thesis again, because setting aside a one-time event of the strike, so long as we have cash to survive those strike impacts, that means the direction of the industry was still really the same. If you kind of account for the strike impacts or bring those movies back in, we would have been way, way up. So that's good news. And then you can see, so versus last year was down 3 million. Versus my forecast, we beat. And by the way, we beat Wall Street consensus forecast too. And maybe I'll talk about that in a minute. So my forecast was 927 million on revenue. So we beat that by 24 million. At the right, I'm just giving you some just gut level reactions, really quickly on the fly here today. We're going to find out once the actual earnings release comes out and I have time to go through the real details of that once Adam talks about it on the call, all that stuff. So I'm just kind of guessing it. All right, why was I off by 24 million? Although, I mean, that's like barely more than 2%. It's like 3%, maybe less than that. So still pretty close. We're talking like almost 98% accuracy on the revenue line. I think perhaps it's the timing of some of the distribution payments. Maybe there was a little more checks in the quarter than I accounted for. Could be the timing of some investment returns. I did see a little bit of investment income in some details that they showed. I'm wondering about FX rates. Did we see some positive revenue translation from euro sales? Our over at UCI and Odeon. Or I wonder too. We haven't had popcorn as a line item in the earnings. Are we maybe selling more popcorn than what I was kind of guessing? So there could be a lot of explanations for that, but the bottom line on that is, yay, we beat my number and we beat Wall Street's number and we almost hit last year's number even with the strike. So really good news. On the earnings, on the bottom line, so you can see we beat last year by $70 million. That's not small potatoes. And again, if you see that really, I've been telling you how this team has continued to improve the cost structure, so the expense side of the company. Also, a while back I had tweeted, I don't know, a month ago or more, I had been telling everyone, gosh, maybe even longer than that we were going to beat last year on the earnings line. And some people were telling me, man, how can you say that, with the strike impact? And I never had finished answering that. Hopefully, maybe I'll go find. Maybe I had a tweet somewhere where I said it, but I don't think I did because I had planned on putting it in the earnings preview. That once again, I love that Adam is out in front of us. Well, there were a lot of one-time expenses in last year's Q1. So a big part of this improvement over last year is just the management of the team. They have managed us to being healthier and leaner. And then part of it is there were some one-time expenses. And that's why I knew we were going to beat last year because, if it's a one-time expense, you don't repeat it now. And so that alone going away improves your bottom line. So really good news. You can see that we beat last year by 70 million. We beat my earnings number even by almost 40. And, I've got the notes here about the one-time expenses, obviously the strike impact. So beating last year, even with the strike impact. Again, I want you to just imagine how much better it would have been had we not had the strike. So that's telling you your management team is doing a good job. And then all the rest of kind of this beat on my number is probably related to some of my guesswork on what happened to the revenue line. So just really good. Beat Wall Street, beat retail's forecast, my forecast. Looking good versus last year, even with the strike impact. And so as we continue to improve and start to see the strike impact be done, I called it the strike blip as far back as last October. When that blip is done, we return to kind of up and to the right. So good stuff. Let's take a look at cash and dilution because they gave an update on that. Again, go to the AMC Investor Relations site. Check that out for yourself so that you're not just taking my word for it. You're not taking other people's word for it, and you're learning how to read this stuff too. So let's take a look at cash and dilution. So you have something called cash and equivalents. That's what I'm calling C&E here at the top. Cash and equivalents for Q1 ended at $624 million. So he gave us an end of quarter. So March 31st, Easter, he gave us an end of quarter cash number. So now you know what we finished last quarter with. It's $625-ish million. On the dilution, he gave us an update on that too. So he said they've completed 12.8 million shares of the dilution for about $42 million. That's $3.25 a share. And there's $209 million left. Remember, we said we would do up to $250 million on that program. So you can see we've sold 13 million of those shares. I find that really interesting. Let's pause on that for a minute. So you remember the day he announced it, I was even on like a mini vacation with my family and took a quick minute to come talk about it. And if you remember though, in the like 2 days after he announced it, we had these huge dips. And I find that interesting because I think the dilution didn't really happen until kind of this last week or so. And it's only 13. Remember I told you on a video once too, that'd probably be between 70 and 80 million shares, which is really what we're still tracking towards at these prices. Basically, the market priced in as though the entire dilution had happened right away. And remember, part of that was shorts, in my opinion, attacking the stock. So we saw short interest spike radically. If you've been following short interest on Ortex or Fintel, and honestly, I'm not really all that concerned about. I don't know. People like to kind of take shots at Ortex and Fintel, and I understand why. I understand how messed up the data is. But if you track the same data over time, it still tells you directionally what's going on. And so the point is, whether you track Ortex or Fintel or anywhere else, short interest spiked significantly since then. And so in a way, I'm smiling too because I feel like Adam almost kind of head faked these guys and said, "Hey, we're gonna do this program," and then boom, they all piled on the shorts. He kind of outweighted them for a minute, and now we're climbing, and he's kind of selling well at right moments. And I say that because I remembered in 2021 the way he managed that, and there were times where the dilution actually was part of some positive stock movement. So that time will tell how the rest of this $200+ million goes in this program. But I also have told you I like to think pretty soon here we won't need more dilution. Now I had meant that in terms of like when this one finished. But so you can see if you take the end of the quarter, now I'm on the third bullet here, guys. So if you take the end of the quarter and you add what we've sold so far, effectively without counting any cash burn, we're at $670 million of cash. Now Q2, I've been pretty open with you, so we've only basically finished April, right? We're not quite done with April here. We still have some decent strike impacts this quarter, and so I have said, and I may have to get a little more bullish than I was, based on the fact that AMC just beat some of my numbers. But we still have some strike impacts in the quarter in terms of if you compare Q2 this year to Q2 last year, it's going to be a significant difference. Now, last year, remember, you had Mario and some other just massive, massive movies. So it's hard to compare, but we will have some cash burn this quarter, just as we did last quarter. So that's what that's showing you. We had a little burn last quarter. We'll have a little less, I think, this quarter, but still have some. But then that I've said for a long time, if we had enough cash sort of in the war chest, then we can be done, because at some point here we start having positive earnings and positive cash flow that I believe starts kind of Q3 and Q4. So the whole back half of the year, if you kind of add it up, we're probably cash flow positive. That is worth me deep diving again just to check the latest on all the movie releases. But that's my point of view. And I'm saying here that could begin as early as June, because remember, cash flows are real time. So you'll get a quarterly reported number. But let's say we're done burning cash at sometime in May or something like that. Then as whatever cash you had at that point, now you start adding to it. You start going the other way. So the point was let's never get down to zero. Well, right now we came into the quarter, if you count this recent dilution, we have almost $700 million of cash. So let's say we burn a little in April and May, start turning around a bit in June. You can just hear how obvious it is. We're not going to run out of cash. It's not going to be an issue. So we're doing well. And frankly, that's why one of my recent videos, I kind of said, hey, when is the job done? And that's sort of what I was referring to. Like, if he has positioned us the whole survive then thrive thing, we're almost done with the survive part. Like, we kind of did it. And then we start to get to move to the up and to the right portion of the business, at least. Can't promise when that happens with the stock, but that's part of us eventually breaking the shorts, because as we move to profitability, there's just nothing left for them to do. They're not going to want to burn cash forever on all their positions. All right, so some things I'm watching. This is sort of outside of everything I just talked about. I had thought about making a video today or tomorrow to kind of pick apart the week and talk about some stuff, but because of this earnings preview, it was just worth talking now. So I'm just going to give you these more as flyby, top-level bullets. So I'm kind of all day, every day, watching a lot of events going on with the Bank of Japan and the Japanese yen. Now, remember, I'll just sort of, tease that with, we had Archegos, we had Nomura, obviously we've got the Credit Suisse relationship, and there's just kind of 20 years worth of economic policy and decisions and a lot of things that have gone on with Japan for a long time. So I guess the way I'd call it is it's a bit of a wild ride right now with the yen and everything going on with the Bank of Japan. Maybe you even saw too that like the largest pension fund, it's like over $1 trillion or something, largest pension fund in Japan starting to invest in Bitcoin. So there's just no shortage of large news coming there. And I would just say watch that a little bit, because I think it's related to global economic events too, including us. Mentioned Bitcoin. I want to continue to clarify, first off, that my overall point of view on Bitcoin is about years and even decades. It's not about moment to moment, um, whether the chart is always up and to the right. And so that's the point. It's not going to be always up and to the right. It will have some volatility, and even perhaps related to some of the global economic events I'm talking about. But very long term, yes, of course, that's something I'm still watching, something I'm nibbling at whenever I have purchasing power. In fact, my kids even now own some. We've been kind of using it as a bit of a long term financial lesson here in my house. Of course, I'm watching AMC short interest and cost to borrow. I mentioned that short interest has continued to spike. So, in a way, gosh, I don't know that I could fully say Adam laid a trap for them, but if you wanted to lay a trap for them, the last month or so has been perfect for that, especially as we round into a period of our history where we're going to be profitable. I don't, well, I do think I know what the shorts are thinking, but in general, you could kind of use the saying, man, I don't know what they're thinking, because there's some bad decisions being made on the short side, in my opinion. U.S. Treasuries, I'm keeping track of that. The Mag 7. So if you're not familiar, that's kind of like the sort of large seven stocks. You're watching, say, Google and Facebook and or Meta and Nvidia and a few others, Microsoft, Apple, et cetera, et cetera. So really keeping an eye on those. A lot of volatility there. You want to say Bitcoin's volatile? Geez, you got Nvidia down in 10% in a day, Meta down 13% one moment. You know, we had Google up as much. So there's just some radical moves across the market that I think I saw an interesting thesis by somebody around kind of inflation and currency values and stocks moving against those and sort of catching up in some cases. Other cases, I've mentioned to you that I have a thesis. There's a bubble on some of these, like Nvidia. So it's just interesting to watch. So I'm continuing to keep those as a watch item. Obviously, silver and gold. I'm continuing to watch those as well. With us owning Highcroft, gold in particular. Actually, both of them, silver and gold, I'm continuing to watch. And watching for more than one reason. Like there's some folks that I think have ulterior motives that in the ways they talk about those. And then I suppose there's people like me who are watching them, one, because of the Highcroft piece of the AMC thesis, and then two, because of an alternative to currencies. Um, if you followed me, you know I like Bitcoin more than those, but I completely respect and understand why people do really value silver and gold right now in this environment. It makes a lot of sense to me. And then I'm watching just in general, probably more of a Twitter comment here, but shills and pretenders. So there's kind of just the never-ending war we have with shills. But there's a lot of I've tried to say to you a lot more loudly probably over the last 6 weeks. There are a lot of sort of pretenders among us as well, and just interesting to watch their posturing and the ways that they talk to me. There's been some pivoting over the last month or so, so that's just been bizarre to watch. But good entertainment at least. All right. So, in summary, just a few things. First of all, I see this as Adam making boss moves. You can hopefully still hear almost the laughter and giddiness in my voice. I like that he's making people dance. He made me have to scramble here, but if at least for me, it's just something fun because this is part of a passion of mine, right? I want us to win, but it's a lot more fun, watching some of our opponents have to scramble. I'm sure they weren't planning on this for their Friday evening, so that's interesting to watch. Rumors of maturity dates. So I didn't mention that yet, but you've probably seen some of the posts that effectively, I'm calling it rumors, by the way, because until I hear it from Adam's mouth or see it from AMC, filing, a long time ago I had said it's kind of like the bro or the ape oath, the DD oath. That's what I called it. If it's not from Adam or it's not from AMC, then I'm not reporting it as news. And I hope you all start to take it that way too. And that way people can't make you spin as much. But anyway, so rumors of the maturity dates moving out, and in particular the 2026 debt, which is something I've been telling you for quite a while was going to happen. So it didn't surprise me if it is true, which is what I originally posted on X. But then I kind of took a step back because I was thinking, wait a second, all the headlines were fairly negative. I didn't hear this from Adam himself. And so, look, when it's time, I've said this about dividends, I've said this about stock buybacks, and I'll say this about the refinancing of the debt. When it's time, he'll do it. He will pull the trigger. He will know when to do it, and he will tell us it's done. So let the man cook is my continued sort of mantra. I'm following him. He's the boss. I might have ideas and I might have insight, but I trust his leadership, and so that's always been my point of view and continues to be. Uh, but it will happen. We're going to see that 2026 debt move out, and then that will be another nail in the coffin of the short thesis because AMC will have all the time it needs to pay off that debt. So this earnings is a beat. It beats last year. It beats Wall Street. It beat my forecast. Sorry, it doesn't beat. Yes, it does beat last year. Not on the top line, but on the bottom line. And that's in spite of strike impacts, right? So that's really, really great news for your Friday. I love it. Don't miss that he mentioned that we'll have the earnings call on May 8th. So, kind of schedule that. I always live tweet that, but honestly, I strongly encourage you to hear it straight from him and not from me or from anybody else. But some people sometimes miss it or whatever, and so I tweet it out, and then you get my takes too. But I would just encourage you, if you can make the call, just call in and listen and hear him speak about the business directly, and hear Sean Goodman and perhaps others speaking about the business as well. And then you get your management's point of view that way. You don't have to hear it from me. And then just my point of view that the forward view is really great. We have all the cash in the war chest that we need. It's already kind of in hand. I'm sure there's going to be a little bit more dilution, but that I believe has already been priced in for the most part. And of course, my point of view that we will win. So let's go.